welcome to the month of July. I'm so excited for this month. Anyways, it's my birth month, and we're going to be giving you a series of financial education free of charge on our channel. Just stay tuned and enjoy us as we give you those free financial nuggets so that you can build your own wealth into the future. So today let's talk about capital markets. You know, a lot of people are saying, oh, talk about stocks, about crypto, I said my own license covers only products that are protected. I don't have a variable license that can cover security, all those markets that goes up and down, but all the same, it's about financial education. It is essential that we intimate ourselves on issues bordering around finances so that we can make informed decisions. So today let's talk about capital markets. What is stock? What is bond? What is all these things about? Let me even know what they're talking about. So I would say, to know how money works, we should understand how the financial market actually works. Generally, when a company needs to raise money, they can either issue what we call stock or bond certificates. So let's talk about the first market. The company sells stock and bonds through a process called initial public offering, IPO. During IPO, this is the first time these certificates are being offered to the public, right? So stock and bond certificates are called securities. So I don't sell security products. It's left for the financial advisors. We are financial educators. So, but yeah, you can be educated about it so that you know more about it. Then what is secondary market? After IPO, investors can then buy, sell, and trade these certificates on the stock markets. Among the words stock market, we have the New York Stock Exchange, which is the biggest. Yes. So you might just want to do your research and know which one you're going for and all that. So when we talk about stock, it is just an instrument that signify equity ownership in a corporation and represent a proportionate claim on a company's assets and profits. So if you have a share, you know that even if it's 1%, if the money is coming down, you have 1%. And if the company is also losing, you are going to lose. I have a number of stocks, in my portfolio. Yes, you can start having like Amazon, Netflix, Google, Microsoft. We have in the techs, we have in the automobile industry, we have in the healthcare industry, depending on the one you are interested in. Then what is bond? Bond is also an instrument of indebtedness of the bond issuer to the holders. That's the difference between bond and stock. So the market index, every time you turn on the TV or log onto the internet, you will often see the Dow Jones or the S&P 500, all those stocks. So these are stock market indexes. An index is a statistical indicator used to measure and report change in the market value of a group of stocks. So the rising and falling of those numbers are on any given day provided give you an idea, of how the index is performing and what the market is doing in general. So keep in mind, however, the market indexes are unmanaged and it is not possible to invest directly in an index. So nobody invests there, but it's just a strategy that, teach you and all that. So we have the Dows and Jones, the S&P and all that. So like the Dows, industrial average is the most well-known index in the world. The Dow measured 30 powerful companies in America. Most people consider it as a barometer of the US stock market. However, it does not reflect smaller sized companies. So the ones that the Dows usually, reflects, we have the 3M, ExxonMobil, American Express, AT&T, the Boeing, the Caterpillar, the Chevron, the Cisco Systems, Coca-Cola, Walt Disney, McDonald's, Johnson & Johnson. We have a lot. Microsoft, Nike, Pfizer rather, Procter and Gamble, Travelers, all those ones. Those are the ones that Dow's components are comprises of. And we have the S&P 500. That one is the Standard and Poor's 500 indicator. So it indicates like 500 large cap companies and covers about 70% of the entire US equity value. So this company represents all major sectors of the US economy, from manufacturing to financial, healthcare, techs, energy, retail, and pharmaceuticals. So it better reflects the US markets, yes, than the Dow's, and is more frequently quoted by financial experts. We also have the Nasdaq. The Nasdaq also, it's an index that lists the stock of over 4,000 companies in its market. So it's heavily weighted towards technology stocks with well-known names like Apple, Google, Microsoft, Cisco, Intel, Tesla, Netflix, and Amazon. So outside the US, of course, indexes track the stock of big companies throughout the world, and such as the ones in Hong Kong, China, and all that. So we have what we call the global index. So the world is getting smaller. These indexes are highly observed and have a global impact, affecting not only companies but economies as well are affected all over the world. So that's one thing about stock and bond that you just need to know about. Money markets. Have you engaged in money markets? It's a market for short-term, low-risk securities such as the U.S. Treasury bills, bank CDs, commercial paper, and other debt issues by corporations or governments. Those are money markets. So we have what we call money market accounts. They are offered through banks or credit union, and it generally gives better return than savings accounts and provide easy access to money when you need it. So but it tends to require a higher deposit amount to participate. There was one I participated some times ago. They told me it's $10,000 that we need to get started, some as low as 5,000 though. Yeah, so MMAs are different than money market fund, which are mutual fund with money market portfolios. So we have what we call MMA accounts, and we have what we call mutual fund, or what's it called, money market fund. So when we talk about mutual fund, when you invest for the long term, you must find investment vehicles that have the potential to grow, to outpace inflation, and achieve your purpose. Historically, the stock market over the long run performs better than conservative vehicles like the T-bills, bank CDs, GICs, or government bonds. So, like when we look at the graph historically, we discovered that okay, compound annual return of small cap stocks can give you like 12%, large cap stocks can give you about 10%, government bond 5.5%, treasury bills 3.5%. So now that you know, you should be thinking of what to do in terms of diversifying your portfolio. However, investing in securities like stocks and bonds can be a challenging task for most people. Enter the mutual fund. It has been in existence since the late 1920s. So with just a handful of funds, mutual fund had a slow climb. By the 1960s, mutual fund gained traction, accelerating into the 80s. So today there are now over 7,000 funds in the US and like 5,000 in Canada. So mutual funds have become a popular way for general public to participate in the stock market. Since August of 2000 and year 2000, that's the millennia, assets under management in mutual funds even surpassed commercial banks. That's to tell you how they are gaining tractions, right? So many pensions, 401ks, IRAs invest in mutual funds. That's where they put. That's why if it goes up, your money comes down. It goes if it goes up, your money goes up, and if the market goes down, your money also go down. So There is already a good chance that you are already invested in a mutual fund if you have your 401k, your pension, your IRAs, and all that. However, few people have a solid understanding about how mutual fund, how they work, and then how to use them to make better choices for their goals. So how does mutual fund works? Let's say you have $100 and you want to invest. The small amount of money may only allow you to buy one share of one company stock, and the risk and reward of one stock is high. If you have $1,000 and put $100 in 10 different stocks, you are starting to spread your risk out, right? So now consider if you have 1,000 people like you who also invest $1,000, then together you have $1 million, right? So the last sum would then greatly expand your investment choices. A mutual fund is a pool of money from investors. Each fund has a specific mandate or purpose and a professional fund manager who invests the money based on the specific strategy and the goal of the fund. So that's that about how mutual fund works. What are the types of mutual fund? We have a lot, but the four main types that will be just mentioning is money market fund, bond funds, stock funds, and balanced fund. Money market fund, they are relatively low risk, very low risk. Bond fund, buy different governments and or corporate bonds. Stock funds, buy shares in the company or from different companies. Then balanced funds hold a mixture of stocks and bonds together. So stock funds are quite popular, offering a wide range of funds which can be identified in four main categories: growth funds, value funds, index fund, sector fund. For growth fund, they only focus more on capital appreciation. On value fund, they focus more on the stocks that are deemed to be undervalued in price and then likely to pay regular dividends. For index funds, they aim to achieve returns similar to a particular index such as S&P 500. So if S&P is giving 13%, index fund will just try to pay that amount out. So that's how index fund work. Sector funds focus on particular industry segments such as, is it biotech, is it energy, is it real estate, is it health, and all that. So that's how that one works. So like I said, I do not have the license to sell security products, so I cannot really be telling you about how to buy it, what to buy, when to buy, because I do not have the license to cover. But I'm a financial educator who educates people on what to do and educate them on their decisions so that they know what they have to do. But if they say they want to invest in security product, then we can refer them to the financial advisors that have such license to cover such products. Thank you, and I still remain your loyal girl, Olayemi Akinola. See you in my next episode or next session. Thank you and God bless. Bye.